My name is Parker Johnson, and I'm the National Sales Manager heading up the FA and RIA channels here at VanEck. And I'm joined with Kyle DeCruz, who is a director on our digital assets team. As we get started, I think it'd be helpful to remind people of the history that VanEck has had in the crypto industry. We first got interested in crypto in 2017 when Bitcoin was only trading at 3,000. And for the past 7 years, our clients have been coming to us with questions and seeking out our industry-leading research and resources. I've already had countless conversations with the advisory community to help people understand why they should consider an allocation to Bitcoin and what gives it value. So there's 3 key things I want to underscore: scarcity, increasing adoption, and store of value. The first 2 points just tie to basic economic principles of supply and demand. So scarcity. Bitcoin is limited to 21 million total Bitcoin that will ever exist. So that's on the supply side. So increasing demand or adoption, I also like to think of it as network effect. No doubt, Bitcoin has been kind of heralded as the king in the crypto space already. But with the approval of the spot Bitcoin ETFs, you're going to see a new wave of entrance into the space with people having easier access to the space. So that's going to be the demand side of the equation. And then the last of all is the store of value. Through Bitcoin's entire life cycle, it is proven to be an appreciating asset. It's protected purchasing power. It's hedged against inflation. And when you think about it in a portfolio context, it's provided some diversification benefits. So with that being said, let's get right into it. A historical allocation to Bitcoin has proved very fortuitous. The first question that a lot of people have on their mind is, have you missed an entry point? Kyle, what are your thoughts?
I think that is one of the most common questions we hear, but I think investors have not missed the entry point. Bitcoin is the best performing asset in essentially all time periods, whether that's 1, 3, 5, or 10 years. But if we zoom out further and compare asset classes on a calendar year basis, we see that Bitcoin has followed a consistent pattern over the last decade. Bitcoin has followed a 4-year cycle where it is the best performing asset for 3 years, then followed by 1 down year. Then the 4-year cycle repeats. We always continue to advocate that investors try to dollar cost average into Bitcoin as it can smooth out the investor experience and minimize the impact of entry points.
You know, as we kind of dive deeper and get beyond just that, I think one challenge a lot of people experience with the markets is timing it. And I think that's even harder with Bitcoin. So I think it's important to kind of remind people how we think of it allocating to Bitcoin at VanEck. And that's just through dollar cost averaging. Timing bottoms, trying to figure out tops. Kyle, my next question, why the spot Bitcoin ETF? Why not just hold Bitcoin directly? I think that's a question a lot of advisors might need to answer or be asking themselves.
Yeah, I think it's also a common one. And I think it's really simple. It's the 3 C's: cost, custody, and consolidation. We can focus on cost to start. According to public filings of Coinbase, retail customers generally pay over 2% in transaction fees. Contrast that with Bitcoin ETFs, where sponsor fees are in the 20 to 30 basis point range, with spreads similarly in that range or less. We can also expect spreads to continue to tighten over time. We expect retail customers should continue to approximately see 90% cost savings to access Bitcoin in an ETF versus buying it on exchange. Next is custody. Investors buying Bitcoin on exchange either choose between self-custodying their Bitcoin, which requires some technical expertise and appetite for risk of managing and potentially losing your own keys, or leaving Bitcoin on exchange. The latter brings along significant counterparty risk, where assets are not segregated and potentially can lead to issues at the exchange corporate level, as we saw that had occurred with FTX. With a Bitcoin ETF, the Bitcoin is held in segregated wallets at regulated qualified custodians that are mandated to maintain segregation, excess capital reserves, some level of insurance, and of course, pass standards on the quality of the custody technology. Finally, there's consolidation. While Bitcoin can be held across various digital asset exchange wallets or even self-custody wallets, which are often not able to flow into advisor dashboards, a Bitcoin ETF is held right in a traditional brokerage account alongside other traditional investments. This allows for easy consolidation of client investments for ease of use with reporting, as well as a total portfolio financial planning picture.
I think the framework of cost, custody, and consolidation makes it much easier to remember. I've talked about it at the kind of the front side of it, but would you mind diving a little bit deeper into the resources and research that we have available?
Absolutely, Parker. I think I can't stress strongly enough the importance of having the expertise and knowledge in digital assets. Not only is this an entirely new asset class, but it's built upon new technologies, and these new technologies differ greatly from traditional assets. And so for VanEck, we are not tourists in Bitcoin and digital assets. We were the first ETF issuer to file for a Bitcoin-linked ETF in 2017 and have a fully built-out staff of specialists and digital asset research experts. We inherently understand these technologies, and in fact, demonstrated this as the first asset manager to donate profits to core developers, or those that maintain these public blockchains. We have published over 200 pieces of content at vaneck.com, and further to that, we strive to guide our investors through that large swath of information. It's a priority for us to continue to provide tailored tours, whether that's 101 level, 201 level, or even further than that, detailed deep dives via technical white papers.
Excellent. Thank you, Kyle. I would point people to vaneck.com and our insights page, where we have a lot of blogs that are very germane and topical to what people are already asking or thinking through right now, walking through VanEck's history with crypto involvement, understanding who we are and why we got engaged with it, helping advisors understand how to allocate to Bitcoin, the reasons why, and how does it fit into a portfolio. So we have blogs on kind of all the topics that are front of mind for folks right now. So I definitely steer you to the insights page on vaneck.com. Well, Kyle, it's been a great conversation. So I want to thank you for your time today. And I look forward to continuing to have these conversations with the broader advisory community.
Thank you, Parker.